The S&P is churning toward another all-time high close. Meanwhile, crypto is getting a little bit of a kick in the dick today. We're going to be discussing that, the latest numbers out of China, expectations for inflation, and much more today on Money Never Sleeps. Thanks for joining us today, everybody. As we get going, do us a favor, hit that like button, subscribe to our channel. Remember, nothing Kevin or I say is financial advice, so please do your own research. Kev, we are seeing a little bit of a pullback in crypto. It looks like October is officially dead. We're 9 days into the month, and so far, 3 of them have been green. The other 6 have been red. Don't think that we're going to be maybe seeing the pump in the majors that a lot of people were hoping for. Meanwhile, the stock market continues to be resilient and go up. The S&P 500 at 5780 got as high as 5790 earlier today. Going to be another, unless something drastic happens in the next hour, another close at an all-time high. Really weird market. The Chinese stock market's selling off because people are realizing maybe we can't trust the government to say they're going to, save the market like they originally made it appear to believe. I don't know, like, we were talking before the show started. It's just a really frustrating place to be right now, but we still have to talk about it, right?
Fortunately,
we're not going to just off the face of the earth. At times, I really want to, but what is your current feel for the market and the direction as we are, in the final quarter of the year?
man, I think everyone's just trying to hang on. There's just so much happening in the next 30, 40 days, right? We got an election, we got earnings season. Um, we're maybe seeing something that's happening in Asia kind of unwind, and how is that going to relate to the US? We're already kind of seeing that. We'll talk about it in a little bit. But this is an absolutely frustrating time to be in the markets, which I think it's frustrating because when something is this overvalued and overbought, it's hard to find really good value, right? You're just kind of bucking with the trend and going along with it. That's not necessarily the type of investing I like to do because you never know when things could turn on you, right? Just a little bit of history. Back on September 18th, 2007, the Fed cut by 50 basis points, right? September 18th, 2024, 50 basis points cut. October 9th, 2007 was the height of the S&P for the entire downturn for the next year. Today is October 9th, and we just hit an all-time high in the S&P. I will say that, I'm not saying that it's programmed that way. It's just such a wild time to believe, are we living in a fucking simulation? That it's just
I haven't ruled out the fact that we're all actually dead and this is just like purgatory and we're going through the same bullshit. And that's why there are all these fucking hurricanes. Please stay safe, everybody in Florida. Best of luck there. Maybe that guy who's going to be staying on his boat. See how that one plans out.
I really hope he survives because a lot of people are raising a lot of money for him. He's already have $18,000 on a GoFundMe, and I want to hear the story if he's able to survive. Right? It's insane. He's just got balls, man. He doesn't have a leg, but he's got big balls to be fucking staying on that water.
Of these, I would love to go have a beer with the guy after. Is that like that boat?
Get his opinion on NVDA.
Good luck. Yeah, his opinion on NVIDIA. Yeah, I'm sure
this is
long. All right. Where do we want to go from here? Did you anything else?
China.
Yeah, let's go to China. Let's take care of that. Then we can talk more about the markets here and some of those shenanigans.
The big problem with China right now and Asia in general, again, I've said this before, Japan's economy is a proxy of the United States. Absolutely one for one, right? And a lot of stimulus, stealth QE, to the point where you're seeing a lot of overlap from Asian outflows going to the U.S. equity market, and then that's kind of the carry trade, what have you. But what's going on in China right now is they announced that they're going to do a ton of stimulus. However, there's a huge difference between monetary stimulus and fiscal stimulus. Monetary stimulus, that's within the banking system. Fiscal stimulus, that means citizens of China, we also got fiscal stimulus in 2020. That means they're actually getting money, they're getting checks, they're getting cash that they can use to spend within the economy. When we talk about deflation, that's kind of what you want to do. They're kind of facing a bit of deflation here. That's why you saw this fear of just stimulus. You want to pump the markets up to get people excited, thinking that, okay, things are going to get better, so maybe I can start spending money again. Well, they can only spend money if they have it. That's where the fiscal stimulus comes in. So when you're seeing this equity market just rally, that's pretty much just fucking assholes in America, Australia, all these other markets in the world that are just like, oh man, China's the next big thing. Jim Cramer just said so. And then what happens? Well, nobody's actually putting any money into the economy. We kind of just pump the markets short term. This is a bit of a squeeze. We also saw a lot of short sellers that cover their positions that help raise the price more and more. Now we're getting this bit of a sell-off here, right? We're going to see a lot of money probably flow out of Asia. I wouldn't be surprised if it's flowing out. And it kind of ties with what we're seeing in the treasury market here in the US. We're seeing a sell-off of debt. Why? Because people probably need cash. That's the problem. There's a shortage of cash. I mean, you could say that there's monetary stimulus in the system, but when it comes to paying off debts and there's, people are losing their jobs, there's not necessarily any jobs that are hiring now. I can't really say that unemployment's rising because technically right now, until we get the next revision, it's not. But it's a really weird place for both consumers and I think a lot of businesses too, where it's like maybe they're short on cash and they have a lot of debts that are coming due. And again, I don't care what anyone says. We're going to see the CPI print. Inflation is not in a good spot still. You could say that it's coming down. If you still got to pay on these debts, some of these rates are a little bit higher that they borrowed at. They were on the wrong side of trades. You're going to need cash. That's why I think the dollar is kind of rising here. So it's kind of interconnected what we're seeing with the treasury market, China, and the US dollar. The only thing that doesn't make any fucking sense, unless they're just trying not to get margin called, is if they're taking the US dollar and they're putting it into the equity markets to make sure that they are, raising their liquidation level or lowering it to a point where they're just not going to get liquidated overnight because, I don't know, maybe China or Japan drops another 10% in their index. And did you see that one ETF that's like triple? It was like a triple long China ETF bullish. It was down like 32% the other day.
That'll do.
But there's a lot of idiots that are betting on stuff like that with leverage that really need cash right now, and that's kind of what I'm seeing in the system with Asia, the U.S. It's just a matter of time. It whenever, and like you said before, it's like you can't trust them to do what they say. It's like that is a message that could be said for every single central bank across the fucking world.
There are a handful of people in this world who have any business trading on leverage, and they are certainly not giving away their tips on YouTube. That is for goddamn sure. So if you're getting your financial advice from people on YouTube like us or on other channels, you don't need to play with leverage because you're gonna get worked by far more advanced and highly equipped traders out there. So just be smart.
There's literally baboons with TradingView and the Bloomberg terminal that could outtrade you with leverage. It is such a Ponzi market out there right now. It doesn't matter how smart you are. You will get fucking wrecked if you don't have enough liquidity at this point.
Yeah. Liquidity isn't. There's a reason that, we see Buffett sitting with all-time highs in cash, just waiting. Like maybe we have to wait longer than a lot of people were thinking, but I think the time will eventually come. Let's look at the markets here. We're seeing the Dow up just under 1%, NASDAQ, S&P up about 0.5% each, VIX taking a move to the downside. A lot going on in some of the mid and small caps. That's where, with the expectation that rates are going to go lower, people are placing more bets in those. We get inflation tomorrow, which is obviously going to have a big impact on the market. Current expectation for CPI on the headline is 2% year over year, which would be down from 2.5% the previous month. On the core, it would be 3.2%, which would be flat from the previous month. I think the song remains the same. If we see the headline number come in at expectation, the market is going to react a little favorably. Under expectation, like let's say 2.2%, the market's probably going to react very strongly. And if it misses and say we come in at 2.5, 2.6, then we're going to start to see a little bit more unease in the market as things have to be repriced. we talked on Monday about the expectation for rates next month and where that's going to go. How it's already shifted to the possibility of no rate cut. Well, if inflation is higher tomorrow, that percentage is going to go way up, and then we're also going to have to talking about maybe they have to walk back that previous cut from last month, which would be awful.
I just hate all the speculation so
Yeah,
much. It's so aggravating because it's like, oh, this one number means everything. It's going to change everything. It's like, it is such a fucking lag. There is such a huge lag with this data and this rate cut. I mean, you probably won't see this rate cut really hit the markets truly for another 3 to 4 months, the 50
yeah.
basis point.
They normally say it's like a 6 month lag on a lot of these moves.
Exactly. And it's so funny that we're seeing people bet on this and just hope, and they're going to anticipate and trade at markets at all-time highs, that everything's just going to keep going up and up and up from here. I don't necessarily buy any of the data coming in. Um, Again, maybe that's just my skepticism with the BLS data that's been revised like 30 times. Maybe some of this inflation data is maybe 100% accurate to the first reading. I think it's going to be very telling after November, where inflation really sits. But I also think that we're getting to a point where, almost similar to China, where there's a lot of monetary stimulus that's out there. There's a lot of money in the system that could be put towards the equity markets. But is there anyone really spending the economy right now? I mean, there's people that are forced to buy things that they don't necessarily want, home insurance, food, things that are elevating in price, and you're not necessarily making much more when it comes to your occupation. So I think that inflation's at such a sticky point where you could see that crash really quick if demand just dries up. But I don't know if that's going to be what we see tomorrow, right? I think what we're going to see tomorrow is probably in line with expectations, and everything's going to seem very nice coasting into November.
Yeah, that I think that's what everyone is banking on, and that's if people start to
Just
get comfortable when the rug could get pulled out from under them. Let's look at crypto. We're seeing a pretty sizable move downward over the last couple hours. Bitcoin just went below 61K. We're seeing ETH holding on to this 2,400 level for dear life. Solana praying it can stay above 140. The market as a whole, down about 1.5% over the last 24 hours. But really, if you look at the hourly view, things have been getting hit these last few hours to really make that move downward more pronounced.
Yeah, absolutely. Let me pull up the hourly just so we can take a look at that. This is on ETH real quick. Hourly candle right there, pretty good move. Yeah, down 0.79%. If we look at Bitcoin though, we're seeing a little bit more of a drastic move, right? You know, there's a bit of a sell-off here.
Down 2% in the last 4 hours.
Yeah, I mean, it wasn't like this, this morning when I checked. I think it was north of 62 or so. Bitcoin dominance oddly coming down. We're starting to see USDT dominance kind of rise. So that kind of plays into the scenario that we were talking about how Bitcoin dominance being so strong could definitely take down the market. But where would that kind of flow into? Probably stable coins, because people are going to want to see, or you're just going to see the pairs or some of those positions close. But looking across the alt market, still down red, nothing too big. Solana looks like the big loser out of the major alts that we're looking at. It's down about 2.15%. It's hanging around that 140 level. It's just such a weird time, right? Because even when the market does move, it's still in the same range it was in for the past few weeks, right? It's or even past few months. Like Solana's been trading in this range since March of 2024 between 212 and 111, sideways chop. And I know we talked about this the other day, but being a continuation pattern, this is a very interesting one because we're still not putting in a high, which tells me that we're probably going to put in a new low, arguing that's probably lower than $7.99. But there's still, like, when you look at this, there's no validation to say that it's going to go down. It's just kind of just sideways chop. I'm just assuming it's going to go down if the other alts are putting in those similar patterns, but are a little bit more clear as opposed to this one. Solana and Bitcoin are just very, very weird charts right now when I'm looking at them. I think ETH is actually a lot easier to trade, in my opinion, than Bitcoin or Solana, just given how much both volume and kind of volatility that we've seen across both of them. Like Bitcoin's been very volatile for the past few months, obviously, right? It's gone from 53 to 69, all the way down to 49, back up to 66, and now here we are at 61. It's a lot of trading ranges, but a lot of volatility that comes with it. Solana kind of the opposite, but still within that stupid range where it's just not moving to make big gains. But the others, I mean, every time you're just breaking down, breaking down, breaking down. So I'm very interested to see if Bitcoin and crypto itself is kind of front running maybe what expectations are for tomorrow too with CPI. But I don't know. I think that we're just getting to a point too where it's like, is this shit gonna keep holding up? We haven't broken out to the upside in quite some time. Everyone's hoping that we do, but it's gonna get to a point where people are just gonna be like, well, if we keep getting rejected, there's a good chance that we're probably not going up to new all-time highs. Therefore, let me just sell off a little bit. Or maybe I'm like, I need some cash. A lot of other people need cash clearly with selling of treasuries. Let me take some profits here because I got in at like, I don't know, 35,000 or so, right? But yeah, I think this is boring, but it's good to see a little bit of, I guess, red as opposed to the traditional financial markets right now. It's a little bit more exciting because I don't know, it's been up only for crypto for some time, and now it's starting to seem like alts are dipping. Bitcoin maybe not as strong as it once was back in like March.
I mean, definitely an opportunity if you're looking to add some short-term bonds to your position. I think most people, they see the rate on bonds and like, not particularly sexy there, but you got some money that you want to just like, make sure you get some guaranteed income on. That is a way to go, especially with the sales today, moving those rates up, on these short, 3, 6, 12-month ones. What else? Anything else in crypto? Go ahead.
This is just because you brought that up with bonds. This is TLT. I'm just finding this level of support right here. If it gets down to this level around $93 or so, maybe not a bad entry. I'm not telling you to buy into that. You're seeing a lot of volume in this range right here, and you've held it here, you've held it here, you've held it here. If you're bullish on more rate cuts and expecting that there is going to be more issues in the system, the long bond here with TLT might not necessarily be a bad entry point on that level of support, especially as opposed to just like safe. I'm not saying everything is safe. There's definitely risk when you come to buying an ETF of these long bonds, but as opposed to fucking just like say something like NVDA that's been going up like crazy. The amount of volatility that we're seeing, and then a lot of people are thinking that this is a bullish breakout here, which technically it looks like it, but again, you're finding resistance at this key level right around here. There's definitely still ways that you can kind of capitalize on people who need cash. They're dumping treasury bonds, but at the same time, it's like, well, maybe they're dumping them and you could pick them up at a pretty good level. Because again, I don't think the U.S. government is going to let the treasuries fail. They're going to pick them up. They're going to buy them. They're going to do whatever they can to make sure that machine keeps burning and churning and there's money flowing into the government. So keep an eye on that. While I have NVIDIA pulled up, let's just talk about this because this son of a bitch, is just, I don't know, man. This is the type of stock that can make grown men cry. And I'm not speaking from experience, but I'm definitely just at that point where I'm just like, fuck this thing. You broke out of this triangle, right? And I said that, Monday is going to be the deciding factor. It looks like we broke out of it beforehand. However, when I look at this, the thing that's really interesting about it is there could be two scenarios that are happening. Either one is the bullish scenario that you're in this pennant, you broke to the upside, and you're going to keep pushing the all-time highs, and you're just going to squeeze the shit out of everyone. My problem with that is the volumes are very fucking low down here, and the price keeps pushing up. That's arguably, I'm not saying manipulation, but it definitely is. Some bells are ringing in my head that doesn't sound all that organic. It doesn't look all that organic, in my opinion, as well. The other thing is we're looking at a simple ABC corrective pattern. A, B, C, and this is from continuation of some 5-wave that we got over here, something like that. So I see a 5-wave here and I see a 3-wave here. What does that anticipate? What do I look at that as? I anticipate that there's probably going to be a third wave, right? To complements this ABC, because you're going to get your trend, your corrective, and then you're going to continue the trend. So that would anticipate that there is a 5-wave move somewhere around here for NVIDIA. And I think that this is probably going to come after the election or so. But there's a pretty good move, I think, that we can be looking forward to with NVIDIA, especially with on the stochastic RSI and the daily. I mean, it's gotten so. If you look at how steep this is, it didn't even go into the oversold. It just bounced right off of it halfway through and just rallied back up. I think that this is a bit of a bull trap here. Maybe I'm wrong. Maybe it goes all-time highs. Maybe this thing doesn't even look back. Maybe Jensen Huang buys, I don't know, the United States. He just pays for the entire national debt, and he becomes the self-appointed president in 2028. But I don't even know what I'm fucking saying at this point. All I know is I don't trust this shit one bit, especially when they only have 4 customers. And one of them is Super Microcomputer, who hasn't even filed their damn fucking 10K still. We're gonna. The funny thing, if they report earnings before that thing gets filed, I mean, this market is just fucking stupid. I already know it is, but you can't believe like that is a level of just rule breaking, just no consequences for whatsoever. The SEC going after them too. You would expect them to at least get kicked out of the NASDAQ at that point, but who knows? That might be after all the congressional testimonies. Very similar to 2008. If everything starts to fail, it's like, how come nobody saw this? Because you didn't watch Money Never Sleeps. But what I'm thinking here is that we're probably going to see a pretty good move to the downside. 105, key level of support if we're looking at this with a major move to the downside in this 5 wave, 96, and then 82. Where do I think NVIDIA is going to end up? Well, I think it's a lot lower. I think that we'll probably see somewhere between 50 and 32 is a good range if everything kind of goes to shit. If something happens relating to fraud or just like the numbers might not have been reported accurately, way lower than that. Again, we're talking about Cisco, we're talking about WorldCom, a bunch of other stocks that just, or not Nortel, my bad, not WorldCom. I'm not comparing them to WorldCom, but Nortel, where these stocks were just kicking ass in 2000. Next thing you know, just absolute dump once people realized, hey, I don't want to hold this anymore because the people on the inside don't want to hold it anymore. So you see Jensen sell again, which I wouldn't be surprised if that happens fairly soon. You kind of know where you stand on that one.
All right. Anything else you think worth mentioning today? Or is that pretty much it? You know, things continuing to move up on the equity side ahead of the close and tomorrow's CPI number. That is going to be the big news tomorrow. And then we have producer price index on Friday, as well as a few other, some sentiment numbers and things like that. But, next week, I think it's, we're not going to be here Friday. Kevin is traveling for work. Next week is looking like a pretty boring one. Columbus Day on Monday. I don't know if that really, bond market is closed. I don't think anyone really cares about that one. And then we have some other numbers throughout the week, but nothing major there. So CPI is going to be the big deciding factor. And then anything else that happens, globally, whether it's in the Middle East.
I was just about to say, man, you know what the biggest middle finger would be? If Iranian oil fields get hit after CPI and everyone rallies, and then you just start seeing fucking oil go to like 115.
Oil's had a pretty decent, a little bit of a pullback.
Because people don't expect there to be a war. That's the problem. Like everyone's just kind of like, no, nothing bad's gonna ever happen again. It's like I can see a squeeze still in oil. I don't think we're out of the woods with the oil short squeeze. Could go to 70. The next thing you know, it could be north of 85, 90. But that whenever that happens, that happens. It's just such a wild time where we have so many catalysts that could just absolutely spike one thing up or down in any direction, and then no one cares, and the market's just like, who gives a fuck?
All right, that's going to do it for today. We appreciate those of you who joined us. If you haven't yet, hit the subscribe button if you want to come back and see us some more. Drop some comments, share us out, whatever. Have a great rest of your week, everybody. If you're down in Florida, stay safe. And we'll be back next week to talk the latest that is happening in the markets.
Take care.